Ben Bernanke is doing things with the Federal Reserve that have never been done. It may be because he's not a creature of Washington or Wall Street. He grew up middle class, the smartest kid in a town now falling on hard times. He told us because the Fed is so powerful, it should be more open. The seal of the Federal Reserve is embedded in the floor, just outside the room that changes the fortunes of the world.
Wow. They don't build them like this anymore.
This is where Bernanke meets with his 6 fellow governors of the Federal Reserve, all of them appointed by the President of the United States. Bernanke also chairs the Federal Open Market Committee, which decides interest rates.
Those meetings are secret. Why is that?
If we held those things with a TV camera on us, it would create lots of volatility and problems in the market. But I should say that, we've come a long way. In 1994, when the Fed made a policy decision, change interest rates, we didn't even announce that we made a change. But now, after every meeting, we put out a statement, say what we did, explain what we did, why we're doing it. And 3 weeks later, we put out minutes that describe everything that happened in the meeting. So we're becoming much more transparent.
When I called and proposed this interview about a year ago, your representative laughed out loud and said the Fed chairman never does an interview. I wonder, why are you doing this?
Well, it's an extraordinary time. It's an extraordinary time. This is a chance for me, I think, to talk to America directly.
And a chance for us to understand where he comes from. Ben Shalom Bernanke grew up in one of the few Jewish families in Dillon, South Carolina, today a town of about 6,000 people. His grandfather, Jonas, immigrated from Eastern Europe, landed at Ellis Island, and came here to start a drugstore.
Our family came here in 1941. My grandfather, Jonas Bernanke, bought this building, made it into the JB Drugs after his initials.
Later, his father and uncle took over the store, which has since become a restaurant.
We're sitting on this corner where your family store was, and I see it's Main Street.
Yes.
People feel like guys like you are tuned into what happens on Wall Street, and you forget places like this.
I come from Main Street. That's my background. And I've never been on Wall Street. And I care about Wall Street for one reason and one reason only, because what happens on Wall Street matters to Main Street. And if we don't have stabilization in the financial markets, if we don't take the steps necessary to make sure that credit is flowing again, then my father couldn't get a loan to build his new store. When I was young, we had just a screen porch over here on the left side. But,
we went to the old neighborhood. The Bernankes left here years ago, and a recent owner couldn't quite make the mortgage, so the economy literally hit home.
When you first heard that your childhood home had gone into foreclosure, what did you think?
Well, I was sorry to hear it, but in a way I wasn't surprised. Dillon has taken a pretty big hit in the economic downturn. Unemployment rate's about 14%, and there have been a good number of foreclosures and plant closings and those things, and I think about that.
Numbers were always Bernanke's thing. He taught himself calculus and got an SAT score of 1590 out of 1600. A friend talked him into aiming high for college.
I came home from school one day and there was a phone call for me, and I picked up the phone. They said, "This is the Harvard admissions department. We'd like to let you know that you're accepted in the freshman class." And I said, "Come on, who is this really?" But my parents had their doubts about my leaving and going so far from home. But
no, wait a minute. Your parents weren't thrilled that you were going to Harvard?
No,
this is a dream come true.
My mother was definitely against it. First of all, she said, you don't have the clothes. You won't be able to dress properly for Harvard. And it's a long way from here. How are you going to come home at holidays and so on? So my parents ate into their savings to let me go, which I'm always grateful for. It didn't work that
Bernanke
hard.
helped pay for college, working construction and working here. The future chairman of the Fed wore a poncho and waited tables at south of the border.
What did you learn about work?
Work is hard. That in order to feed your family and to give your kids opportunities, it's not an easy thing.
Back in the marble confines of the Federal Reserve, Bernanke told us that he understands that many Americans are afraid.
I've been kicking around the country. I spoke to a woman in Ohio who took her son out of college because she got laid off. I spoke to a woman in Nevada who has an advanced stage of cancer, and she was told by her county hospital that they couldn't treat her because a hole had been blown in the state budget. What do you say to those people?
Well, I got into economics because I wanted to make things better for the average person. When I see a job loss number of 650,000, like we saw last month, I know that's not just a number. That's 650,000 lives that have been disrupted, families that have had to move or take children out of school, houses that may be in danger of foreclosure. I know something about what people are going through.
And that makes it all the more outrageous when he hears of financial firms handing out perks and bonuses after they've taken bailout money.
The era of this high living, this is over now, and that they need to be responsible and use the money constructively.
And you would say what to those bankers right now in this interview?
I'd say that their job right now is to find a way to make loans to creditworthy borrowers, to get their banks back on the path of making good loans, safe loans, and to have a reasonable sense of humility based on what's happened in the last 18 months.
We asked Bernanke what it's been like in the office the last 18 months, with his staff sometimes working 80-hour weeks.
I noticed when we were in your office you have a couch in there. You've been sleeping on that couch?
Once in a while.
Really?
Once in a while, yes. And sometimes it goes through the weekend. Sometimes it goes overnight.
The Federal Reserve is the lifeblood of the banking system. Its 12 regional banks are clearinghouses for commercial banks. This is one of the vaults associated with the Reserve Bank in New York. Robots carry cash in the vault that is as big as a football field and 4 stories high. Each pallet loaded with $100 bills is worth $64 million. The Fed has 22,000 employees. It clears your checks and your ATM withdrawals and provides economic forecasts. But one of its most important responsibilities is regulating the nation's biggest banks, to be the watchdog.
You're supposed to keep them out of trouble. So how did all this happen?
Well, a lot of mistakes got made, no question about it. But, this was a much bigger thing than any single firm or any single individual. Over the last dozen years or so, enormous amounts of savings has flowed into the United States and some other industrial countries. That savings has come from China and East Asia. It's come from oil producers, and it has, in the hundreds of billions of dollars, it has come into our financial system. And that would be great if we took that money and invested it wisely and got a high return. But instead, our financial system didn't do a good job. We had a regulatory system that was like a sandcastle on the beach. When you had little small waves just lapping up against the sandcastle, everything looked good. But when you had a big breaker come in, suddenly the system wasn't strong enough to deal with it.
Does the Federal Reserve bear any responsibility for missing what was happening to the banks as it was happening?
Well, like other regulators, we probably could have done more. We've already done put a lot of effort into reviewing our practices and reviewing the bank's practices. We are trying to strengthen our regulation at every point that we can. So I don't want to deny that we certainly could have done a better job and others could have done a better job.
The state of our economy.
Now, President Obama and the Congress have a fiscal stimulus plan of nearly $800 billion. There's a separate bailout for financial firms that's at least $700 billion. Next, the government is looking for a way to clear bad debt off the books of crippled institutions.
There was a panic in 1907, so the Fed was created to prevent that from ever happening again. And then we got the Great Depression, and now we have this. How do we prevent this from occurring another time?
Well, tougher regulation of large firms. It includes having a set of laws that allows us to wind down a large internationally active firm without the adverse impacts on the markets that a disorderly bankruptcy would have. It includes possibly having a systemic regulator, a regulator that has some responsibility to look at the system as a whole.
Your response has been to do what the Fed didn't do in 1929, and that is pour money into the system. But there's an argument made today that That's not what the problem is. The problem isn't that there's too little money in the system. The problem is there's too much fear in the system. That with these companies being propped up by the government, no one on Wall Street can tell who's solvent and who's not, and therefore business does not move.
Well, I absolutely agree that confidence is key. People don't know what's happening, and they're afraid, and they're not sure whether or not the system is going to recover. So how do you get confidence? That's the question. And I think the way to get confidence is to show progress.
But are you seeing any progress? What's going well?
I think all of our efforts so far have produced results. We're buying about $500 billion in mortgages in packaged in securities by the GSEs, Fannie Mae and Freddie Mac. And that seems to have brought down mortgage rates significantly. It allows people to refinance, to get out of high-rate mortgages. We're seeing progress in the money market mutual funds and in the business lending area. And I think as those green shoots begin to appear in different markets, and as some confidence begins to come back, that will begin the positive dynamic that brings our economy back.
Do you see green shoots?
I do. I do see green shoots, and not everywhere, but certainly in some of the markets that we've been functioning in, and we've seen some improvement in the banks as well, and certainly in some key cases.
What will be the first signs of recovery?
One sign would be that a large bank is successful in raising private equity. Right now, all the private money is sitting on the sidelines saying, we don't know what these banks are worth, we don't know that they're stable, and they're not willing to put their money into the banks.
If you had a message for the American people in this interview, what would it be?
Scott, I'd say three things. I'd say, first of all, that the Federal Reserve is here and is going to do everything possible to support this recovery. The second thing I would say is that recovery is not going to happen until the financial markets and the banks are stabilized. And we do have a plan, we have a program for that, but it's going to take some patience, it's going to take some support, and we're going to have to go forward with that. But the third and final thing I'd just like to say to the American people is that I have every confidence that this economy will recover and recover in a strong and sustained way. The American people are among the most productive in the world. We have the best technologies. We have great universities. We have entrepreneurs. I just have every confidence that as we get through this crisis, that our economy will begin to grow again, and it will remain the most powerful and dynamic economy in the world.
Go behind the scenes at the Federal Reserve at 60minutes.com.